How hard is it to buy a house in 2025? So recently I was on a TV show and the host turned to me and they said, well, Jennifer, we've heard from a lot of experts that buying a home is really hard. Should people just wait a few years? Yeah, my face in that video is amazing because I was like, what are you talking about? I was like, no, there's more loan programs than ever before. There's more ability to get in. Like, no, it is not hard to buy a house. So I'm going to cover the basic requirements to buy a house, some of the stupid stuff that you hear that makes it so you don't want to buy a house, and we'll be real, some stuff that makes buying a house not realistic in specific areas. So if you're new to this channel, I'm a mortgage lender licensed in 48 states. Yes, I do business across America, so I've got my little hands in every single county seeing what's going on. Now, here's what you need to know. Is it hard to buy a house? No. So a lot of times people think, oh God, I don't have 20%. I'll never have 20%. I haven't seen people put down 20%, like honestly, since 2009, maybe. I mean, even then we weren't seeing people do 20% down. I'm more shocked when I see it. Okay. Conventional loan, first time home buyer, 3% down. Okay. $300,000 house, that's $9,000 to buy a house. In some cases, the down payment is lower than what you would pay in a security deposit first and last. So you really want to know that down payments are not crazy. And people go, oh, well, 3%, that mortgage insurance is going to be crazy. No. If you have really bad credit, yes. But if you have good credit, no. Okay? And look, if you're like, oh, I have bad credit, Jen, let's do FHA. FHA doesn't punish you for credit. 3.5% down, okay? If you're a veteran or if you're active military and have served at least 90 days, VA is 0 down. Then in certain parts of the country, you've got USDA in those agricultural areas, that's 0% down. That one's a little tougher to qualify for, I'll be real. So, okay, down payments aren't crazy. We don't require an ARM. Closing costs. People go, I'll never have a down payment and closing costs. You can ask the seller to pay your closing costs. I can't stress that enough. There's so many parts of the country where we're seeing the seller pay the closing costs every single day. It just depends on how your real estate agent negotiates. I can't stress that enough. I would argue probably 90% of the buyers that we've worked with over the last 2 years, the agent negotiated with the seller to pay the buyer's closing costs. It's not something that's totally unrealistic, okay? There are certain markets, if you're in a market where there's like 3 houses for sale and there's 200 buyers, that can be harder, right? I would be telling you just save as much as you can while you look. Those markets are brutal to begin with. But if you're in a market like Dallas, Houston, Columbia, parts of Florida, you can definitely get the seller to pay your closing costs. Indiana, Ohio, Pennsylvania, I can keep on going on and on and on. So don't be dismayed by that. Now, the next thing I hear is, well, I haven't been at my job for 2 years. You don't have to be at the same job for 2 years. That's something a lot of people don't realize. So let's say that I'm a nurse and I worked at a doctor's office, but now I work at a hospital. Great. As a lender, I'm going to be going, okay, are you guaranteed a certain amount of hours per week? Yes. Great. What's that amount? That's going to be what I use to qualify. Okay. That's what you need to know, because I've heard it a lot where people think they have to be at the same employer, and you don't. You have to be gainfully employed for at least 2 years. That's it. Now, are there exceptions to that? Absolutely. So let's say that you went to dental assistant school and you got your dental assistant degree and you got hired by a dentist and you do 40 hours a week, or you have a salary. I can use that income immediately. You don't even have to work for that dentist for a year. If you're coming out of some sort of trade school and going into that trade, we can use the income immediately as long as it's guaranteed. So salary or guaranteed at least XYZ hours per week. So really easy. The only time it can get a little tricky is like, look, self-employed, yes. we want you to have been employed for 2 years, but that's not the bulk of what we see, right? You know, I'll hear like, oh, I was working at this restaurant, but I just switched restaurants. You know, am I totally out? No. So no, there's a lot of flexibility to that. Years ago, decades, it used to be that you had to be in the same line of work. That's not even a rule anymore. No. So lots to do with that. Now look, if you are a trucker, I am just going to say, make sure that you're keeping, if you switch employers, keep the same type of pay. If you go from miles to by the load, that's problematic. We're going to need you, getting paid by the load for a while before we can use that income. I had to do that quick deviation because we do have a lot of truckers. We appreciate your business. So income's not challenging. Great. Down payment wasn't challenging. Cool. Credit score. Wow, there's so much anxiety around credit and it's so unnecessary. And the reason there's so much anxiety is because you have Experian, Equifax, and TransUnion that have spent billions of dollars on ads telling you that your credit score is the key to your life. And if it's not perfect, buy our monitoring service, see what you can do to improve your credit, do this, do that. You've got Credit Karma, you've got Credit Sesame, you've got all these different things that are making it like, my credit's not perfect, everybody hates me. Not a real thing. Not a real thing. I mean, here's the thing. So what are minimum credit scores? VA itself doesn't have a credit score requirement. It's going to depend on the lender. We go by credit history. FHA, there's a lot of lenders that go down to 550 for the credit score, us included. Conventional, 620. That's right, guys. You don't have to have an 800 credit score. And I think that's really important for people to know because sometimes I'll be talking to someone, they'll be like, well, I want to get my credit score up. I have a house I like, but my credit's not good. And I'm like, what's your score? 680. I'm like, you're fine. You're fine. It's okay. You're fine. And it's like, but you're fine. Like, let's do the math. Let's work this out, because there's certain circumstances where getting that score up is going to take a long time. And does it make sense for the benefit that you may get in rate due to the higher score? No. And that's what you really need to talk to a lender about is like, does it actually benefit me to wait? Because most of the time it does not. Okay. Now look, if you're currently not paying your bills, that's a problem. Okay. If you just had, 3 cars repossessed, that's a problem, right? But if you're like, I pay my bills every month, I was late 2 years ago once, but everything else is fine. Easy, all day long, easy. Okay. So down payments, not crazy. Credit, you don't have to have perfect credit. Income, there's a lot of flex to that. And then finally, people go, well, I'm too old to buy a house, aren't I? Or I'm too young. I hear both of those. Here's the thing. Whether you're 18 or 125, you will be offered the same loan products. As a lender, we do not look at age as a determining factor in anything. And I've had people go, well, I'm 90, I'll be dead before the 30 years paid. Okay, that's your call, but I'm not an actuary. So if you want to do a 30-year loan, cool. If you're 20 and you're like, well, I'm 20, so you're not going to let me do a 15-year. Yeah, I will. Yeah, look, you get same access. We don't look at age. So here's the thing. Buying a house is not hard. Are there parts of the country where it's brutal? Yes. Let's get real about it. So let's talk about those markets. LA is going to be really tough for the next few years. It was already a really hard, expensive market, and then a lot of it burnt down. And when I say it's going to be hard to get a loan, if you have credit, income, assets, and can support the payment, you're fine. It's just finding the house is going to be hard. There's some parts of the country where it's not hard because getting a loan is hard. It's hard because the price point is so high. San Jose is a great example of that. You can get a loan, you can qualify for a loan, but the prices may be prohibitive. So I think that's one of the big disconnects that we see in the media as well, is everyone makes the assumption that because housing prices in certain areas are high, it's hard to get a loan. It's like, no, a loan's just based on those parameters that we already covered. It's math. The question is just, can you afford whatever that payment is? And if I look at the United States as a whole, are there markets that are miserable for buyers because they're so expensive? Yes. But are there lots and lots of markets where it's a buyer's dream? Yeah, I mean, I'm seeing houses that are $200,000, $300,000. You know, there is still affordable housing in America, and it's in some great areas. So make sure you're looking around. Don't just watch the headlines. Getting a mortgage is not hard. You know, find an area you can comfortably afford and get your foot into home ownership. If you have questions, comments, or you want to get pre-approved, reach out to me, 786-933-2077. Thanks for watching.